Good morning, everyone. Good morning, everyone. Glad you're here with me this morning. Wow, I can't believe it's already June. Hey, Ollie. Yeah, it is a beautiful morning here. We are in the mid to upper 80s here now, so officially got the tan working and all that good stuff. So there's some good weather around here in the southern portion of the state of Oregon where we're located, Rogue River Valley. But let's kind of get started here this morning. We're going to cover at least 3 different markets here in our morning breakdown. Let's talk again about risk. You always remember any sort of trading that you do, even though Nadex makes it really easy, we know our risk ahead of time, that sort of thing. We got to understand that we can lose money, right? So it's basically don't trade with money you can't afford to lose. That's really, really important to understand. That's me, and as I mentioned, I live in the southern Oregon in the Rogue River Valley. We're about, I don't know, 45 minutes or so from the Northern California border, right down Interstate 5. But it's a beautiful area down here. We have the Rogue River that runs right through town here and out to the ocean, and pretty area. Let's see, lots of river sports during the summer. All right, so let's talk about the news for the rest of the week here. And we're going to look at today's news events, and we'll even look at some other events. So let me shift the screen over and we'll take a look there. So give me just a quick second. And all right, so this is, I think most of you know, but if you're new with me here this morning, this is Forex Factory. I use their website for news. It's also another calendar I will show you, but just go to forexfactory.com, click on their calendar. And again, I like to filter this by clicking the filter, and I just uncheck everything up here, these 3 boxes. I just keep the red one because those are the ones that are high impact, and that really narrows it down. It makes it easier to read as well. But over here, you can see the news for today. We have at, by the way, this is all Eastern time, East Coast time. So we have at just before 7 o'clock, we have Fed Chair Powell speaking. So that could have a little impact on the markets. We'll have to be aware of that. But there is some news later this evening out of Australia. Tomorrow, we have one report at 10 a.m. out of the US. And then Thursday, we kind of have a mix. But Friday's the big day. Friday's the non-farm payroll day. And that is a market mover predominantly, but we can see some good movement. Just be aware there's some good movement in the US dollar, Canadian dollar Forex pair. Because we also have these this unemployment rate and employment change out of Canada. So the combination of those multiple reports there will tend to move that pair. So just be aware of that. And again, the reason I like to know when the news is because I don't necessarily want to be taking a trade going into the news. If I'm already on board something, then I just manage it accordingly. But rather than be surprised because you don't know that there's a known news report coming out, it's good to know. All right, so another big one right here on where we got right here on Thursday. So we have the out of Europe. These are big ones too. We have the monetary policy statement and then the European Central Bank press conference with the European Central Bank President Draghi will be chatting. That tends to move the markets as well. All right, so that's one area to find some news. The other one I like is this one right here. It's called My FX Book Economic Calendar. It's a little more detailed. You can change it up a bit here just by clicking. Let's see if I can click it here. There we go. And come down here, and again, I just uncheck these and come down here and click Save. And the cool thing about this is that as it comes closer to the news, it will pop up. You'll hear audio alerts that these are being released. So if you aren't looking at the screen, it will pop an audio alert. If you have your speakers on, of course, that's beneficial, but you can see what's going here. And just another really good news source to check out. And again, every morning, just a good idea. If you're trading, using Nadex, just a great idea to check when the news is. so you have an idea of expected news. We can't do anything about unexpected news like tweets, and I think you know what I'm talking about there. But you know, the president tweets a lot, and he can move the markets by some of the things that happens there. All right, so let's do this, and we'll come back here. All right, so again, those are the two places you can go, forexfactory.com or myfxbook.com, or both. All right, so let's take a look at, we looked at, you know, a little bit of the news that gives us an idea of the volatility. And what I want to do now is to just do some chart review. So let me bring the charts over. And we'll do it here. So first market I want to look at this morning is the E-mini S&P. All right, so let's we'll start here. Again, I work from the top down analysis, looking at higher time frames, breaking it down intraday time frames, starting out with the 243-minute chart predominantly. But before we do that, I do want to take a look here at the daily chart. You can kind of see what's happening here. I got some stuff here. Let me delete this. There we go. So these the red and the green rectangles you see on the chart just simply are there for support and resistance to give me a visual of key support and resistance levels near where the market's currently trading. And as I look at my momentum indicator here, I can see that, you know, the market's lost a lot of momentum, but the way I have this thing built is that, and I'm looking at the red and blue, the middle panel here, but the way I have this thing built is as the market tends to move, it eventually starts to run out of momentum or decrease in momentum. And you can see here that this red here actually lightens up. It almost gets a little bit white. And so that tells me that momentum on the move is weakening in that direction. You can see over here, for example, is a good example where it weakened. Now it doesn't pick the top or the bottom. It doesn't do that. But what it just tells me is to be aware that we could be seeing a potential switch here. So what I see happening now on this daily chart, and this is just something to keep an eye on going forward, is a potential reversal pattern developing here. So that's a potential left shoulder, and that's a potential head of a head and shoulder bottom pattern. And note here that the momentum here off this daily chart is kind of double bottomed, hasn't it? See right there and right there. So of course those will have to hold. If this support level here, this green level gets taken out, then you know, then the next stop will probably be down here at this blue horizontal line. But we're also at an area where this is an oscillator where it could bottom out, and this just kind of measures the cycles of the rhythm in the market. So you can see we're at a lower range here. And so what that tells me is that, you know, be on the lookout here, because if this gets above the midpoint, which is right up in here about 50, then that has confirmed a cycle low, and the market, you know, could continue to push a bit higher here. Now, another point here, using the Fibonacci retracement, coming from this low to this high, and you can see the market hasn't quite retraced 38.2% yet. So really off a daily chart, this is kind of the region that I would anticipate somewhere in here we're going to push down into eventually. No guarantees, of course, but that's what I'm looking at here. And we'll do it like that. So what I do then, those are the key areas, I think, because so many traders do look at those levels. I just like to mark them on my chart, and then I get rid of that to clear up the chart. So I know that that is the region for those retracements. All right, so that's the big picture view. Let's go down here. I'm going to jump down to my 4-hour chart, which is technically a 243-minute chart. But you can see how the market has legged its way down here into the support level. So we have here, see this, it's kind of stair-stepped, hasn't it? This is a support zone, and the market tagged that and has bounced. And now you can see we're in the middle here, right between the two zones. So I don't know how much more activity we're going to have in the S&P this week ahead of the non-farm payroll. Some weeks can be volatile, other weeks very quiet. But so just be aware that we tagged that. That is the low that you saw on the daily chart there for that potential shoulder, or excuse me, the potential head of the inverted head and shoulder pattern. But also you can see it, there's even another one kind of developing here, right? We kind of have, let's see here. left shoulder head of a potential inverted head and shoulder pattern here on the 4-hour chart. So momentum has shifted here off this 4-hour chart to the upside. See this? So we double bottomed here and here off the 4-hour chart, 243-minute chart, and you can pull up a 4-hour chart on Nadex, and you can see the move up here in momentum, and the oscillator's extended too. So showing a lot of energy right now to the upside here. And we could even be really picky here, and we could say that shoulder, head, and right there, that little pivot was another shoulder, and the market's already breaking. All right, so let's work our way down to see what we got here, because we definitely have a shift in momentum here on the 4-hour chart. Let's go down to, I use an 81-minute chart, but you can definitely use say a 60-minute chart. All right, so you pretty much see the same story here, right? A lot of momentum to the upside here, price clearly moving up. Now price is tagging my 89 period moving average right there, that red line. That's a very important level for my methodology here. The market, it's amazing how often the market tags that level or it acts as support or resistance. But what I want to show you here now is, let's see here, let's use this. So we kind of have a resistance right through here. And that also ties in there. See the real bodies, the thickest part of these candles, those are known as the real bodies. And then it, not quite perfect over here, but definitely right in the ballpark there. So at the moment, that is a resistance level, and we'll see how the market reacts to that here at the bottom of the hour when the day session opens up here. But still a lot of momentum. We're against resistance here. We'll see if the market wants to pop through here. Let's move down in time though. Let's go down to the next level here. By the way, my charts are in multiples or divisible by 3s. So I have, this is a 27-minute chart. 27 times 3 is 81. 81 times 3, 243. That's how I set my charts up. All right, so actually one thing, let me set this to the other charts. There we go. And then we can come back here. And now you can see a little clearer view of the market right against that level. Momentum is picking up still here. And this is the next level of resistance right up here, about 27.80, 81. You can see I have a line drawn there. So we're seeing a lot of energy. Let's look at the theme here this morning in the S&P. So let's go back to the 4-hour chart. Momentum up, right? Oscillation up, energy's up. See the theme here? So do you want to be shorting this market at this point? Personally, I do not. There's a lot of energy based on my momentum indicator telling me there's a lot of energy here to the upside. Now, I will watch for some sort of retracement here. Yeah, so and even to this day, I've been at this for over 30 years, and I have a 8.5 by 11 piece of paper hanging on my wall, just above my monitors. It says at the top of it in big letters, sell resistance. At the bottom, it says buy support. Okay, so that's my theme inside of just the basic breakdown of the whole methodology is looking for retracements here. So we looked at this. You see a lot of energy here to the upside. So what I want to do at this point is I want to watch this market patiently for some retracements here on some of these smaller time frames and look to get on board for possible moves to the upside. Does that make sense? Because we have all the momentum, the energy in the market is currently to the upside. You can see over here on my quote board, the SP up 21 points here at the moment, pre-market. All right, so let's look at this next time, the 9-minute chart. Here we go. All right, so another thing too, so I use the 50 period moving average. So basically 50 period moving average, 89 period moving average, 200 period moving average. And I wouldn't worry about the yellow one here. I don't use it that often, but that is a 13 exponential moving average. But what I want to see here is the 50 period moving average is angled up, right? In fact, if we go back just quickly here on the 27-minute chart, you can see down here, let me blow that up for you. It is also angled up. So I use the moving averages for support and resistance and the 50 period for trend direction. All right, so I want to see a retracement here, but let's mark off other support resistance zones So let's do it here. So look at that, tags it right there and there. And we got this level. So that would be the nearest level of support. It's about 6 hands. Yeah, it looks like about 6 points lower. We get a little retracement, at least at this point in the morning, right? Something like this. And then look for a bounce off of that support for a possible rally. All right, so let's do this. So we have it against that resistance level. So I'm anticipating some sort of pullback. And the other thing too is on this time frame, we have a high to a higher high, right? And then I come down here on this indicator and a high to a lower high. Now this is not confirmed over here because what I'm looking for is divergence in the market, and that is not set up yet. And what I mean by that is I want to see this blue line right here, the jagged one, hooked over to the downside, like it's losing momentum. And it's because this candle here is still printing, the indicator is adjusting itself. So it's not there yet. But if it does happen, then we could possibly have that. In other words, high to lower high on the momentum indicator, high to higher high on price. So that's divergence, which would lead me to believe that we could potentially have some sort of retracement that would fill in this area here. It's not there yet though. We have to wait on that. All right, so let's come down to the 3-minute and we see a little bit more buying pressure coming in here. Momentum's kind of flattened out here ahead of the open, but the oscillator is still pushing up. You can see prices actually still trying to push higher here as well. So I'm going to watch for retracements here going forward for the morning and see if we get a retracement into a support area for a possible entry opportunity here to the upside, at least at this point. Now this can shift through the day. Okay. All right, so let's move on here. So that's kind of the plan with the S&P. And now let's go down here. Let's take a look at gold, because gold has had a good run, a really good run here the last couple of days. And we'll load that up here. And I'm going to go to the daily. So if you haven't been following it, you can see the moves. So this is a daily chart, and you can see this day here. Let's see, I don't have my data box on here. Hold on. Here we go. So this day here, the market was up $18.70. This is August gold. On the 3rd yesterday, up 16.80. So 2 back-to-back big moves. Even this day here, this was back on the 30th, up $6.10. So the market had been in this trading range for some time here, that channel, and it just powered right through it. It was testing it here, and then boom, yesterday. Now today, it moved into that resistance zone. See that red area there? That is a resistance zone, but look at all the momentum. So it's very possible this market wants to push even higher here. One of the things that I look at is, look at that resistance right there. If you are new to trading, or even if you've been at it for a little bit, but you're just kind of toying with it, I really encourage you to always look left on your charts. Always look left, because you will see these pivots, these pointy areas. If you're confused by that, how about this? See that point right there? There's 2 lower, well, let's see here. Try that again. There's 2 lower highs on the either side of that green candle. That's what I'm talking about, a little pivot. You'll see these all over the charts, right? That's predominantly what I'm looking for when I draw these lines. And if you look left, you will see these, and you wonder, how does that work? I mean, look at the market today. I mean, that's an eyelash from these highs, isn't it? Isn't it? That's pretty doggone good. You'll see it over and again. So it's important to mark these levels off so you won't sit there and wonder why a market stalls out at a certain point. Now, this does not mean the market can't break through, but typically the way I look at this is that on the first attempt at a resistance level or support level, the market will tend to retrace. Okay, and so if you keep that in mind, then you won't, if you're in a trade and the market reacts or bounces off your support or resistance level, you shouldn't have any worries. It's pretty natural that the market tests those levels and then reacts to them. All right, so we're up here reacting to that, but look at all the momentum still in this market. Still a ton of of Momo here to the upside here on this daily chart. All right, so let's work our way back down here quickly. Gosh, time is already flying this morning. All right, so let's go to the 4-hour chart. Look at that sprint, right? That was over the last couple of days, as I mentioned here, off those big green candles on the daily, right into the resistance area, as I mentioned. So momentum is retracing a bit here. It's very typical when the momentum indicator gets a good run in one direction or another, it will retrace. In fact, let's just do this. Let's see how far it's retraced. Looks like 50% on the button, right to this level, right to these old highs. It's right in that ballpark. So this is a place for it to perhaps react here. But we have a lot of energy still to the upside. The cycle study here is working its way a bit lower. I would anticipate we could even see it come down here to the, put in a cycle low like that. Like any of these right in here. Would be watching for that. All right, so the market runs up, hits the resistance zone, so we could potentially find a pattern to trade here. However, we want to take a look at these other time frames as well. And the pattern could be in either direction. We don't have clarity quite yet. We do know we're in a resistance area. Now on this, the 81-minute chart, the market's pulled back a little bit, was very choppy here. In fact, here we go, let's do this. This is a megaphone pattern. Let's see here, I'll probably draw that right there. So just the opposite of a triangle or pennant formation. Very often when the market sprints to a new high, if you get a megaphone, it tends to pull back, but I don't find that the pattern's super reliable. What I just see here is a lower low here versus that low. We do have this loss of momentum, so that is in favor of a continuation pullback. But now you look at this, you see where the market is in relation to these two zones I have here. It's kind of near the middle of the support and resistance zones, right? The red being resistance, green support. Let's just keep moving here. Let's go down to the 27-minute chart. Okay, so clear uptrend here off the 50-period moving average. You see the blue line. And let's see here. And we kind of had a pattern that's already developed here off of this time frame. We're kind of right here for a short-term reversal type of trade. See, that's kind of an asymmetrical head and shoulder pattern. Complete loss of energy here on this time frame. That has happened on the pullback. Again, the 89-period moving average acting as support, that red line. All right, so I don't want to look to go short at this point, right? Because it's already broken down out of that zone. And that would mean I would be chasing the market. And how do I know that? Well, for my methodology, this is awfully low. If I'm going to get short, I need to do it when the oscillator's up up above 50 here. If I'm trading off of this time frame, for example. But let's keep rolling here. Go down to the 9-minute chart. All right, so here's some divergence right here. This is a good example. So let's see here, we have looks like low to lower low, see that? Low to higher low, and low to equal low. So I call that double divergence, and that will typically, the market will from there seek out the nearest level of support or resistance. The problem with this one is it's kind of already there, isn't it? Kind of already there. So not a trade opportunity at this point. The next level of resistance is going to be up in this region here. It'll be interesting if the market breaks above this this high here, but let's clear this off. We have that divergence as I just drew out. I look at these patterns, I see these patterns all over the place. They don't have to necessarily be right at the bottom of the chart or at the top of the chart. See that? There's an inverted head and shoulder pattern right there the market's working on at the moment. So we have that support area, and it's not real clean, but right in there as well. So look at this. So we had the divergence here. We had the higher low in momentum. The shift is to the upside now. It's zero line is right up here. So you see how it turned white because momentum was weakening. This was giving us a heads up. Had I been looking at this, say a half hour ago. Not quite. Let's go to the next time frame. So that was the 9 minute. Actually, let's sync this over these circles to the other charts so you can really see more detail here. This is a 3 minute chart here. And let's do one more. I think I had another one here. There we go. Let's go to the 3 minute chart, and there you can see a little more detail, the clarity. So see how look at how momentum has shifted. The market's starting to pop here a little bit, but again, we have this resistance of the, well, at least at this point, at the bottom of the resistance range, right? The bottom edge of that box. Nice. So here's another level too. So what I do, this is pretty much what I do every day, all day long. Once I get this set up the night before, and I did not do this so I could, I did not do it last night so I could walk through with you folks, but just do this, looking for these key support and resistance levels. I'll look for the areas or zones to mark as well. And you can see that, basically the market at the moment is touching here, 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 and here in our viewpoint. So that's a pretty solid little resistance level. All right, so let's go see. So we have that. So let's take a bigger picture view. So we're fading here on the 4 hour. This is fading as well. And we're at an area where we could bottom out on the half hour chart. That's the lower left corner. It's starting to shift here. So do you see the kind of the mix that we have? The higher time frames typically always rule in my viewpoint, but these lower time frames will do cycles inside of those bigger time frames, or rotations, if that's probably a better way to say it. So the pullback here, we could see a pop, and then we could see a continuation move back to the downside to further support levels, which would not be surprising. So the that next support level is that top of that green level, right? That green zone if the market breaks down, which is right here about 1320.60. It's about $7 lower thereabouts. So with the market in between the zone here, these two big zones, I'm gonna just be patient. Not super anxious with this market at the moment. That's a good sprint. I would prefer to see some very big, I would prefer to see a bigger pullback than what we've had here currently. So that's what I'm going to watch for here with the gold market. All right, so the next market, and we're right at the bottom of the hour here, we'll take a look at the dollar yen, the Forex pair, dollar yen. Just load that up. Now, this market has been on a move to the upside here. Let's just, without even blowing the charts up, let's just start down here at the 4 hour chart. I look at the angles of these lines, right? So we have the 4 hour, the 81 minute, or technically a 243 minute, 81 minute, 27 minutes, still moving up. Now the 9 minute, we pulled back a bit, same with the 3 minute. And this over here is a 1 minute. I kind of use that for fine tuning entries if and when I find entry opportunities. All right, so let's blow this up real quick and we'll walk through this and see if there's an opportunity setting up here. All right, so just kind of the opposite of gold, right? We're down here in a support level, very similar to what the S&P had. There's a little tiny head and shoulder pattern perhaps setting up here off of the 243 minute chart. See that? We don't have a right shoulder yet, but right into the support zone, right into the support zone, that's actually what I love to see. All right, so we have a shift, right? The market came down, the energy has shifted to the upside, about ready to go positive here. It's just below the zero line. Let's go down to the 81 minute. Or the higher time frame zones, the guidelines to go by, absolutely. Yeah, absolutely right. Let's make sure this is over here. There we go. So let's look at this on the 81 minute. and there's some clarity here. Now, there's quite a gap here between these two zones, isn't there? So this area right up here, this little pivot right here where my mouse is, that is an important level if the market takes that out. Now, I use my momentum indicator as kind of a guide here too, and you can see that momentum right here has surpassed this peak in momentum. And I don't have a lot of time here this morning, but the idea is that price has a higher probability of testing that level right there because of the break in momentum. No guarantees. I'm not telling you to go out and buy or trade this at all. I'm just giving you some analysis here. All right, so the market broke up and out, and now it's coming back to test that support at the top of that green zone. So let's work our way down to the half-hour chart, 27 minutes. And you can see a little more clarity here as well. So when the oscillator, the cycle study, gets into these upper regions, then I look for anticipation, or I anticipate, having trouble talking this morning, a cycle back to the downside. So that means price is going to have to come back down too, right? Now that doesn't mean that's not going to provide an opportunity. The market could just kind of gyrate here at the top of this zone because we have the 89 SMA right there, and we have the top of that support zone. So the price can actually stay right here for a couple hours while this loses energy to the upside and fades and comes back down. So on this time frame, I'm looking for, again, for a bit further of a deeper of a pullback for possible buying opportunity. Now let's look at the 9-minute. There, so there's some more clarity, and let's just come way back here. See this point right there? It touches several areas through here. Look at that. And you see how quickly I did that, and that's just from all the time I've had in front of charts. And you'll pick it up. You just have to remember, put a little note on your monitor. Always look left. Look for these zones where the market's likely to react. All right, so I just drew that line in, and the market obviously broke through that, but now it's come back to retest it. So you have breakout, retest, breakout, breakout above that level of resistance, retesting it. All right, so on this time frame, see where the cycle study is? Remember, we just looked at it on the other higher time frame, the 27-minute. So this could come down here and cycle back up. All right, so one thing I rarely ever talk about on this program, but I look for markets to move in waves as well. And I just like to do what I call a little wave projection. There are a couple of different ways we can do it. I'm just going to use a trend line. I'm going to measure, let's see here. Now the first wave I'm going to show you here is not a good wave because the market's kind of inside this right here. In fact, let me just redo this here. That's a channel, right? I didn't draw it perfectly, but I think you get the idea. So typically waves measured from channels are not that great. The market needs to break out and establish some sort of trend up or down. All right, so this is what I'm talking about though. So if I measure from this low to this high, it's just a way to project price out, and I take that distance, see that line? I put that line right there at the bottom of that pivot. The market tagged that almost perfectly, actually exceeded it, didn't it? So that's one wave. The next wave would be right here. Now we can adjust that if we want, but I'm going to keep it the same size and put it right there. So if I do that, look what happens. That's suggesting the wave, the next wave will come all the way up here at this point. This is only if price does not break lower. Then we'd have to redraw this and measure. But at that point, if I put a price on here, 108.50, and the market's at 108.20, so it's about 30 pips higher, and you can see that takes price right up and through this resistance level. So if I get a setup on these lower time frames, I'm not necessarily going to look for the move all the way up here, but I would look for a move potentially, of course, this would depend on the higher time frames, but up into that resistance level. Again, not telling you to go out and buy this. That's not the point of this. This is showing you how to analyze the markets, at least how I do it, and you get some idea. So 50 period moving average is angled up. We have support here, 2 levels. We have that horizontal line. We have the top of the green zone, and the market is losing a little bit of momentum. Excuse me, which is very typical on a retracement. And you see how it's kind of double topped here. In fact, here we go. Look at this. It's from high to higher high, high to slightly lower high, or equal, we could even call it equal high. So that's divergent. So we got a little bit of a pullback, hunted out the nearest level of support, kind of some double divergence here. Well, do we take the downward wave into consideration? There's, at this point, price is moving up though, isn't it? And so that's what we want to project from a move up. Now, if the market's not moving down, I don't need to project it to the downside. The 50 period moving average kind of being a guideline here, right? It's angled up. Price is pushed to a higher high versus a higher. If it made a lower low, then I would project downwards. So it's the direction that the market's moving, we're trying to project that way. Little price projection. All right, so here you go. So see, that just took out that low. So kill that projection, right? Because it just broke down. You can still project, but we have to have that pivot low. And that's what we want to keep an eye on here. So the market's pulling back like we're talking about. Remember on the higher time frame here? Looking at the potential cycle here on the 27-minute, if I go back to that, look where that is, right? Because I don't want to buy at a cycle high. I want to buy at cycle lows, sell at cycle highs. And again, since we're kind of in between zones, there's not a lot of clarity here, but that's what I would be watching for here. Some sort of retracement with an opportunity potentially to get on board to the upside. And you could do that with, binaries, into day binaries, into week binaries, just depending on the time frame that you're analyzing. The higher the time frame, the more time I want until expiration. That's, again, with any of these markets we've looked at. Now, before we get out of here this morning, let's take a quick look at the S&P. Was the first market we reviewed here this morning. And let's see if this is going to load for me. There we go, it just took a bit. All right, so the market just pulling back here just a little bit here at this point this morning. Remember, we talked about looking for pullbacks into support levels, the blue lines here on the, well, if you look at the chart in the upper right corner, the cyan colored lines. All right, so we talked about the S&P, gold, and the US dollar, Japanese yen. So just waiting for some things to happen to look for some potential opportunities. We still have on the S&P here a lot of energy to the upside. So I'd keep an eye on those folks. All right, that's going to do it for this week, everyone. Thanks for swinging by. Appreciate it. And before I get out of here, one final thing here. Hold on. If you need some assistance, you want to reach out to us, you want to find out about the course I put together, seminars, whatever, that's how you do it right there. That's our web address, www.gbinary.com. You can email our staff, support@gbmembers.com, or give us a call. We are real people. We are in an office here in town. I'm there many days, other days I'm here at home, that sort of thing. But anyway, you can reach out and contact us. You can actually talk to us if you desire to do so, find out more about what we got going on. And again, gbebinary.com. All right, everybody, thank you so much for swinging by, and we'll do this again next week. I'm Jim Prince. God bless. We'll see you all next time. Thank you, everyone.